It was a chaotic week in the metals world, with investors juggling a Federal Reserve meeting, a blockbuster U.S. data release, and threats of growing supply concerns out of Chile. COMEX copper prices started the week on its back heel before hitting a multi-month high on Tuesday. Prices have been supported by declining LME warehousing stocks and threats of a prolonged strike at Escondida mine in Chile. Those threats have grown after BHP Billiton's latest contract offer was rejected by the workers' union, raising the specter that the world's largest open-pit copper mine will be offline for a period. While a short impasse would have a negligible effect on a largely balanced market, the prospects that a mine that produces 5% of the global supply being shut down for an extended period would spur buying and tighten supply. Closer to home, monetary news was center stage, with Chairwoman Janet Yellen and her fellow central bankers convening for the first Federal Reserve meeting this year. As expected, the policy board decided to keep interest rates steady and changed little language in regards to its expectations for 2017. How the Fed reacts to the tumultuous nature of the new administration is a central question. But with the jobs market healthy and expanding, the prospects of 3 rate hikes this year remains on the table. Speaking of jobs, this morning showed over 200,000 Americans joined the labor market, indicating that slack remains after 7 years of continual growth. It's a welcome start for President Donald Trump and a sign that much-discussed Twitter rants and off-the-cuff remarks aren't discouraging companies from expanding their workforce. Next week isn't as juicy on the data front, but with Chinese investors slowly migrating back to the market, expect volumes and trading action to pick back up. I'm Dalton Barker for the Metal Bulletin Group in Chicago.